gold versus the S&P 500, bonds, crypto, and more. A recent Gallup poll reveals a surprising shift in investor sentiment. For the first time in over a decade, gold has moved ahead of stocks as one of the most favored long-term investments among Americans. In this video, we'll unpack the survey results, analyze each asset class, and explore why gold may still be flying under the radar despite growing recognition. What does the Gallup poll reveal? Each year, Gallup surveys Americans to learn which investment they believe offers the best long-term potential. The options range from conventional choices like stocks and bonds to alternatives like real estate, crypto, and gold. In the latest data, gold has climbed into second place, surpassing stocks. This change reflects growing concerns around market volatility, inflation, and economic instability. As more Americans turn to gold as a reliable store of value, cryptocurrency, long-term trust, is still in question. Cryptocurrency is a relatively new addition to Gallup's survey since 2022, still sits at the bottom of the list with just 4% of respondents naming it the best long-term bet. While crypto and gold share appealing traits like decentralization and privacy, gold's unmatched 5,000-year history of preserving value gives a clear edge in terms of credibility and resilience. By contrast, crypto markets are still maturing, often plagued by extreme price volatility and a high failure rate among coins. Gold has outlasted every business cycle, whereas cryptocurrencies were born after the end of the last major and substantial business cycle. Bonds, safe but underwhelming. Bonds, often considered a low-risk investment, received only slightly more support than crypto, with 5% of respondents backing them. Despite the backing of the U.S. government for many bonds, investors seem wary of the long-term returns, especially in an era where inflation can quietly erode purchasing power. In fact, research by Meb Faber Cambria Asset Management has found that replacing bonds with gold in a 60-40 portfolio changes very little in terms of volatility and drawdowns, while generating a slightly higher return profile. Savings accounts and CDs, short-term comfort, long-term risk. Some offer yields above 4%, but the national average yields remain stuck at just 6%. Still, like bonds, these assets are susceptible to central bank policy changes and the ever-present pitfall of inflation, which can erode real returns over time. Stocks and mutual funds, a volatile third place. Stocks were chosen by 16% of Americans, placing them third overall, while equities have historically provided strong returns. Current market uncertainties, from geopolitical unrest to shifting global trade policies, are giving investors pause. Although stocks are often seen as essential for long-term growth, gold has quietly outperformed equities in the last 2 decades and continues to outperform in 2025. Spotlight on gold. Now to the standout performer, gold, climbing to second place. For the first time in over a decade, gold is being increasingly recognized not just as a store of value, but as a cornerstone of a resilient investment portfolio. In a world of unstable rates, rising debt, and economic shocks, gold's appeal is timeless. Prices have hit record highs, and investors are discovering new ways to put their gold to work. Investors can now earn a competitive yield on gold, paid in gold, as much as 4% as of today. See the link in the video description to learn more about Monetary Metals Gold Lease, fixed income products, and begin earning a yield on this timeless store of value in addition to its steady price appreciation. Real estate, still the favorite. Real estate continues its reign at the top of Gallup's rankings, a position it's held since 2014. Americans still see home ownership and property investment as pathways to wealth. However, today's real estate market isn't without its challenges. Rising prices have led to affordability concerns, crowded markets, and ongoing expenses like maintenance and property taxes. Even debt-free homeowners face perpetual tax obligations. Compared to real estate, gold offers unmatched liquidity, no maintenance costs, and no counterparty risks, traits that are increasingly attractive in a globalized mobile economy. More importantly, gold is liquid, divisible, and borderless, which can be ideal for modern wealth builders looking for flexibility when it comes to their assets. Gold is a hard asset that doesn't rely on tenants, bank financing, or tax breaks to be valuable. To that point, one tax-efficient way to own physical gold is through a gold IRA. These accounts offer the benefits of gold ownership with added advantages, such as tax deferral and secure, regulated storage. Depending on your goals and investment size, different gold IRA providers offer varying benefits. For lower minimums, Birch Gold Group and American Hartford Gold are solid options. For high-net-worth individuals seeking premium service and competitive pricing, Augusta Precious Metals stands out. If you prefer a personalized, family-owned approach with a low investment minimum and great educational support, consider National Gold Group. For both IRA and private ownership solutions, Noble Gold Investments may suit your needs. See the links in the video description to find the best gold IRA company that aligns best with your financial goals. So what does this Gallup poll actually say? This year's Gallup poll signals a shift. Americans are reevaluating where they park their wealth for the long term. With inflation stubborn, debt levels surging, and uncertainty looming over traditional assets, more people are looking at gold as a safe, flexible, and increasingly productive investment. If you're looking to safeguard $100,000 or more in savings and want to explore how gold could work in your portfolio, check out the free gold investment webinar hosted by Augusta Precious Metals. See the link in the description to reserve your seat. Thanks for watching.